What's up, everybody? My name is Jesse Ray. We're here at the Growth House. As you can see behind me with the sign, I'm here with a special guest, a friend of mine, Mayank, and you're in India right now. Is that correct?
Yes.
So we connected over LinkedIn, probably had about a 45-minute hour call, and I told you this right afterwards. Probably one of my favorite calls of the month. I was, taking notes. That's why I have a notepad right here. But I want to kind of hear your story, how you got involved with entrepreneurship, and then how'd you get involved in co-living. So, just take us back. Actually, before we take a step back and kind of hear your story, where are you at right now? What are you trying to do? I know you're kind of doing consulting for co-living. Can you kind of dive into where you're currently at?
So right now I'm working with as a co-living consultant as well as an advisor to co-living and prop tech companies across different geographies. So the major projects that I'm working on is a payment solutions, which is building a solution for co-living from Estonia. Then a property management software, which is specifically built for co-living out of Singapore. A co-living company out of US, that's out of Washington DC. Then one other co-living company based out of India. So these are the major projects that I'm working on right now. But in last 3 years, I've worked in across about 21 different projects in 13 different
Wow.
geographies, and all of them have been in the world of co-living and co-living related technology products.
I love it. Yeah, you got a lot of exciting projects I want to even talk more about. But let's take a step back. How'd you get into co-living and like what was the reasoning behind it?
So that's an interesting story. I was fresh out of my post graduation. I did my MBA, and I was on to my first job. That was a startup. When I joined that startup, I had to relocate to a new city. So when I was in that city, I was alone. There's no family members of mine. First time in the new city, right out of college, a fresher. And I started looking for places where I could stay. Either the places were too expensive if they were good, or the places were not good at all in terms of infrastructure that I wanted, or the like minded people that I wanted to stay with. And this was in 2015. And I somehow found something, but it was still a trade off for me. But this started going on in my mind right from there. Uh, then somewhere around in 3 months time, I figured out that this is something that's a big problem. I started speaking to people that is this something, if I create, would you love to stay with me? That was the birth of Simply Guest. It was started by two brothers, which I didn't know, but I ended up joining them as a co-founder later. So I did
Mhm.
continue my full-time job for 2 years and kept building Simply Guest at sites. We started in 2015, but this was the story which led me to kind of build Simply Guest, because I wanted to create something which is affordable, which is full of similar kind of demography of people, where you can find like-minded folks, and more positively growth-minded folks, which where you can discuss, sit, have fun, learn everything, right? So that was my entry into the core. So back then, co-living was not a very famous term to be used. So we used to call it
Mhm.
shared living. And eventually, when I started speaking with the counterparts around the world, I realized that what I'm doing already exists.
Mhm.
And more so over, there is a community layer that we need to build over it. So we started building community around our shared living in 2017, and then we never looked back. So we scaled it to about 500 tenants, 17 different locations,
Wow.
$1 million in bootstrapped revenues, and we were kind of, a lot of VCs reached out to us at that point in time, but our vision was clear, that because we were not from real estate, we were not looking at it as a real estate business. We were looking at it as
Mhm.
more than that, right? So we wanted to take it slow, and that's how we survived. Now, some people may say that that's something. It's a controversial topic. People may have different opinions on that, but that was our thought process at back then. So we did it for 6 years. Pandemic came. We had to take a pause, reevaluate. We tried pushing hard to kind of come out surviving. But
Mm-hmm.
March of 21, it became kind of evident that our cash flows were depleting, and our cash reserves were depleting. So we had to take a call, and we closed all our contracts slowly. And March of 21 is when we closed down Simply Guest. But while this was closing down, another opportunity jumped at us. So in 2020, while this was happening, we had built a lot of technology for ourselves. This was for managing Simply Guest, because my partner was an ex-Googler and he had a lot of experience in building products. So we started building something of our own. So we took all that technology, put that into
Yeah.
a new brand called Jumbo Tiger, and then created a property management software specifically for co-living, launched it. Our launch kind of party was attended by 210 people from 30 different countries. We were here also, we were building it bootstrapped, hustling hard. But life had some other plans. My co-founder ran into some personal issues, so he had to leave. There's nothing that we could do, so we kind of gave it to somebody who could make use of it, and then we moved on. And since then, I have been in the consulting and advisory world, and that's how I met you. So
Yeah.
I keep meeting new people. I write a lot on LinkedIn, and that's how I stumbled upon your profile, because you were writing something on co-living, and I love to talk to people who are doing co-living, because you get so many different perspectives. So
Mm-hmm.
that's how we met. So that's my story. That's my journey that I have been through in about last almost a decade. Next year I'll complete about 10 years. And that all of that in co-living and prop tech world.
That's amazing. I'm curious, going back to Simply Guest, how did you have that business structured? Were you leasing out, properties, single family homes, or did you have ownership in those homes? How did you guys structure that?
Right. So we had no money in our pockets. Nobody wanted to
Mm-hmm.
give us money when we started. So the only way for us to quickly do an MVP was to take existing single family homes,
Mm-hmm.
retrofit them into like shared living, so that they become suitable for shared living, and then start renting them out. So we were guaranteeing a fixed rent to the owner. It is called master lease agreement, where owner doesn't get actively involved in the operations. They just give you the home, expect a fixed rental income on a monthly basis, and you have to take care of everything else. So that's how we started. um, as we moved on, our first 150, 200 kind of units came through this model. But then we stumbled upon another interesting opportunity where the owner wanted to be actively involved, right? So it is about finding right partners. So this guy had 100-unit building, and he wanted to partner with us. He wanted to continue to operate the place, so we did a management agreement with them. And then we basically started marketing, started curating the people who were coming in, onboarding them, and then the regular day-to-day operations the owner was taking care, right? So
Hmm.
so that is the kind of management model that we worked on. So at the end, our 500 unit portfolio was 30% management model, 70% leasing model, where we were master lease model, where we were leasing out and then renting it out ahead. Now, uh, there are pros and cons of both, but having a mix is always helpful, because it hedges your risk.
Mm-hmm. You mentioned MVP, and our audience is a lot of people that have W-2s that are trying to, trade corporate for cash flow, try to escape the rat race. And there's also startup founders straight out of college that are studying, trying to, get into Y Combinator and different, accelerators like that. So can you explain a little bit what is the MVP and how you guys went about, making that happen?
So MVP is the full form is minimum viable product, right?
Mm-hmm.
So what is that minimum this product can be our product was a home. For somebody, it can be a tech tool, a SaaS tool, or a hardware product. It can be anything, right? So when you want to go to market, you want to test out whether there is an actual need for the product that you're trying to build, right? And what is that minimum structure with which you can go and test it out, right? That structure is called the minimum viable product, and that's how you test out your hypothesis that this is a product that is work. If this test becomes successful, and then I will go ahead and start scaling it up, or start going ahead and start investing in more in that to work it out, right? So it's very important to test out MVPs, because otherwise the downside of you getting into something without testing out an MVP can be huge.
I've done that. I'm like, you know what? I'm going to work in silence. I'm going to work, spend my money, spend my time, and I'm going to launch it. Everyone's going to be excited. And then I launched a certain product. No one was excited. I'm like, oh man, there's something I'm doing wrong. So I definitely learned the hard way that it's so super important to create that minimum viable product. The question for you is, how would you define success in order to spend more time and more money that it worked?
So, success depends on the kind of objectives that you define even before starting the project, right? So, the
Mm-hmm.
times are changing. When I started, uh, the way to build MVPs was, okay, build a small product, or a basic minimal product, and then launch and look for customers. Now, as of today in 2023, it's all about creating distribution. So, the definition of MVP has changed. Now you create a distribution. Distribution can mean community. Distribution can mean your followers on your social media. Distribution can mean uh, that you have access to a captive audience in the same domain where your product, in which you have a product, right? So when you start creating distribution and then do a MVP, and send it to the same audience that kind of is part of your distribution, that kind of quickly gives you result to make you understand whether this will work or not. And coming back to the question that you asked, right, success, it is very subjective. For somebody,
Mm-hmm.
a success can be getting 10 customers, 10 paid customers to a SaaS product can be a big success, because that means that there is a replicability within the product, and it can scale to, let's say, 1,000, 1 lakh, like 100,000, and even 1 million users. For some people, success is more about the engagement and usage. Like, suppose Facebook, right? Facebook was not monetized right at the start, not even
Mm-hmm.
monetized for first couple of years, right? But what started happening, people started engaging more, they started spending more time. So it also depends on the nature of the product, that how will success look like, whether it is about engagement, whether it is about getting first few customers or first few paying customers. It all depends.
Mm-hmm. What was your definition of a success when you started Simply Guest? Like, was it X amount of people interested or signed a lease? How did you guys define it?
Right, so we had a very interesting approach. We took an offline marketing route, because at that times nobody of us was were very apt in the digital marketing world. We had not built a distribution, so we took offline pamphlets, like we printed it on A4 size, and then we started standing outside the there were tech parks. So where we took our first home and created it as from a shared home perspective, there was a tech park like about a mile away from there. So we would go there,
Mm.
stand in the evening at 5 o'clock, and start handing out pamphlets. Our success definition was that if in 2 weeks we are able to get 15 people interested to just look at a place, right? We will
Mm-hmm.
define that success, and then we will start the phase two of our plan. But we were like much better than that, because we had 6 bedroom. It had 6 bedrooms, our first property, and in on the fourth day, a group of friends came to us. They took all 6 of them together. Right. So
Oh
on
wow.
sixth day, we were able to sell our first property out completely 100% occupancy, just by going and physically handing out pamphlets. Right. So that was our definition of success. That's how we started.
I love that, and I think that like people need to get creative. That's how I feel. 'Cause sometimes I talk to people and it's like, oh, this one method doesn't work. All right.
Right.
Have you done the guerrilla marketing? Like honestly, I've done the same. I've gone and built relationships with different types of, corporations, and then you never know what's gonna hit. So especially I feel like when you're first starting out, like yes, it's amazing to use an online audience, especially if you built a little bit of a brand, but get your hands dirty, get creative. I think this approach still can work. Like there's huge companies around our area of Arizona, Intel, Google building a huge place out here. So I love that. I love that story. What's obviously you found co-living early. and you said, oh, this is a perfect, solution for my needs of finding affordable housing or just finding housing with great, like-minded people. What would you say overall that you see as the main benefits of co-living for people that are looking, for that type of community or looking for housing in general?
Right. So I'll tell you the three. There are three. As we are progressing as humankind, there are three specific things happening around the world. These are undercurrents. These are trends that are happening. Uh, so this is example I give everybody. So my
Mm,
grandfather has 11 had 11 brothers and sisters. My father had five brothers and sisters. I have two, and probably my kids will maybe only be one, right? He may not have a brother and a sister. So our
mm,
families are shrinking. They are becoming nuclear and nuclear, right? So
mm-hmm.
that's the first undercurrent trend that exists in the system. Now, the second thing that exists in the system, uh, for my parent or for my grandfather, it was very easy to buy a house, right? Even though they were not earning as much, the housing was very affordable, right? Now that
Mm,
doesn't, it is becoming unaffordable day by day. If you look
yeah,
at 30 years before, the average age of home ownership used to be around 36, 37 years, uh, or something around that. We can
yeah.
fact check it, but that's the sense. I read it, and that's what I remember. Right now, in a lot of parts, it is going upwards of 40, right? So you see, this is the average age across a population. So it moving it by 4 to 6 years, 37 to let's say
Mm-hmm.
43, 45 now, it's crazy, right? It shows you
Mm,
that owning a house is becoming more and more difficult for people, right? As we are going. So
yeah.
remember that. Families are becoming small.
Mm-hmm.
Uh, Now housing is becoming non-affordable. And then there
Mm-hmm.
is a third thing, right? Experiences are now the new generation, the Gen Millennial, the Gen Z, values experiences a lot more than materialism. That's a fundamental change of generational thinking that has happened. Now you stack all these three trends together: loneliness, unaffordability,
Mm-hmm.
and then experience. What lies at the center of it, right? If you
Mm-hmm.
can find a place with like-minded people, right, at an affordable cost, right, it helps you on all three parameters. You find your tribe, you find like-minded people, you find it at a cost which you can afford, right? And then all of this comes together, right? It's the That's where co-living is, right? That's the center of all the three things is co-living. So
Mm,
that's how I see the importance of co-living has been growing over last decade. If you look at Google Trends, go open Google Trends, type co-living as the keyword, select worldwide as a trend, and see the growth of co-living. Right, you will be
uh,
amazed to see 2015 it is on a scale of 1 to 100, it was like 10, and around 2021-22 it became 100, right? That's the trend and the growth of co-living that's happening around the world.
Makes so much sense, especially after the pandemic. I mean, loneliness like shot up. And so it's
Right.
just like now getting back to actually be interactive with people. I think people are really missing that. I know I was. I was in Portland, Oregon, rain every single day, stuck in my little 300 square foot studio. I was like, I need to interact with people. Like, I'm becoming depressed, and I'm a very positive person. So I totally
Right.
agree. Talk to me about community. What's I know we've talked, and actually, I'll just be very transparent. When I thought of community, I was like, I need to host events. I need to be the main person that makes this community work. And you kind of said, Jesse, it comes from the people. You don't have to be throwing events all the time to have community. So I want you to kind of expand on that and talk about that. I think it was really important. It was an eye opener for me.
Right. So for for a longest time, community has been thought about as a top-down approach, right? Somebody
Mm,
who is at the position of power in a company or at at a at a place has to take initiatives to get people together. They come together, they have a good time, and that was called community for the longest time. That's how we have always thought about community. But if you look at
mm,
it from a perspective of how actually great communities are built, they are bottom up, right? When I say bottom up, people who are part of it, right? If they drive the community, those are some of the best communities that you can be part of and you can feel home in those communities, right? So, from an operator perspective, what does it mean? So, like you said, right? Some operators, they do events. They hire community manager and they do events, and it's attended by some people, it's attended by not. But there is always that transactional value. There will be an event, people will come, they will have a good time in terms of they'll have food, but and then they will move on, right?
Mm.
Uh, Now, imagine if a person who is staying in that space starts taking initiatives that, okay, I play chess, I want people who play chess, and then they start going out to people. Now, imagine the cohesiveness or the response that other people will give because it is somebody from their own space coming up and speaking and trying to do this, right? So when it starts happening that way, right, it has to be seeded initially, but at some point of time, probably at a 10 or 20%, after 10 or 20% of seeding, it starts growing itself, right? So, and
Mm.
that's where the true community spirit starts coming into picture. That's where a true community identity starts getting built, right? So that's my approach to community building whenever I work on something, that it has to be people driven, people who are part of that community. They should
Hmm.
feel empowered, they should feel important, and they should take initiatives. Once that starts happening, there's zero cost of running a community, right? A
Yeah.
lot of people see community as a cost center. A lot of co-living spaces see community as a cost center. It is not. It is actually a revenue center. It is actually that can help you bring down cost of customer acquisition, right? If done right. So that's something that people need to understand.
I love that. So good. Can we talk a little bit about a little deeper into how do you empower those people and how do you kind of inspire them or kind of help them start creating that community? I mean, I'm just thinking about it in a way of I immediately go to, okay, so you have to kind of vet certain people and see, okay, is this person going to end up, wanting to start more community in the house, or how would you, empower these people?
So, as I said, it requires seeding. So, first of all, I'll tell you a case study of a co-living
Mm.
company that I helped build a community, right? This is in India, in the city of Bangalore. They have 5 properties, and they host about 220 people across those 5 properties, right? Now they were struggling with building up community. So then they got me in and we started working on it. This was 6 months back. The first thing that we did was basically started writing that if we have to get somebody from the existing members of our spaces, what that person should look like, how will that person look like, what will be its characteristics. So we started building out a persona of person who we actually want as a resident community manager. So that was our
Mm.
first thought process, and we built out a structure. So that was point number one. Second is then we rolled out that document to the existing community, saying that, hey, we are looking for a resident community manager. This is how that is going to look like. This is your incentive, right? That's where the seeding comes into picture. This is your
Hmm.
incentive. It is a 3 month role. After 3 months, we will get somebody else so that more people get to participate in it. And that's how we rolled it out. We got about 7 applications. We ended up choosing one of them, right? And the incentive that we gave was about a 25% discount on the rent because that's the profit margin that we had. And we said, it's okay. We don't want to spend anything, but we'll not take our profit margin for that particular guest because he also needs to initially have some incentive, right? So that was the incentive that we gave to him. He started working out as a resident community manager. His first task was to just go and talk to people, understand what their interests are, what they like, what they don't like. So he did this for about 2 weeks. He was able to kind of get to know everybody, talk to everybody, right? So one caveat here is choosing a right person is absolutely important because it can make or break things.
Hmm.
So that process of selection needs to be a little bit more stringent. But this guy was, we were very lucky. It worked wonderfully. So he spoke, and then we told him that, okay, let's host one first event. We will do a potluck. Like, again, I don't want to spend money on community because
Mm,
that's the easiest thing that you can do. But if you do a potluck, let people cook something, bring. Food is one thing that everybody bonds on. And if
mm,
that is cooked by you, it brings so much more love into picture because you are taking an effort of cooking something and bringing to a group of people. About 11 people ended up joining that potluck, and they cooked so much
mm.
food that we had to call the other 20 people in the community, and the environment was electric. All we did was
I love it.
provided them utensils, provided them like good disposal mechanism, and got one person to stay there from our staff so that if they need anything, it can help. But not even a single rupee spent. Great evening, and that became the seeding event where everybody
Mm.
started talking to everybody. Everybody knew everybody. Before that, there were people who didn't even know who was staying in the building. But this
Yeah.
event kind of opened the door for us in a right way. And then we started having weekly catch ups. Now, there are two ways we divided these catch ups. One was a hangout, like a jamming session where people will just come after office on a on a Friday evening, and somebody will just play guitar or somebody they will jam, and that's all, right? And if they want to bring their own booze, they can bring their own booze. That's up to them. But that was
Mm.
the setup that we used to create. We set up few lightings on our terrace and created the area so that the environment becomes like that. That was one. And the second thing that we ended up doing was more around, so week one this will happen, and week two interest based events started happening. So
Mm.
we asked him to start talking to people like, are there people interested in training for a marathon? Are there people interested in playing chess? Are there people interested in something else? Right? And each week there was, each second, like week two, something interest based would happen. Week three, again, a jamming session will happen, and week four, again, something interest based. Now, interest based is very specific because not everybody will come, right? But the group, so the intention was to make mini communities within a community so that a
Mm-hmm.
person playing chess will start talking more and more to few other people playing chess. So that's how we have been doing it, and it has been working wonderfully without even spending a single rupee other than the initial seeding event that we did, which was also potluck. But
Yeah.
again, the 25% discount that we gave on rent to this person, and these 3 months were wonderfully well. Then we opened the applications again for the next 3 months because we don't want somebody to be there forever. The community managers also needs to change because people needs to see different sides of people, because
Mm.
I may like you and confirm more with you and enjoy your company. Somebody else may not, right? So you need to keep changing. So first 3 months were great. You won't believe how many people applied when we opened the application for second time. Out of
Mm-hmm.
a 45 member community, 21 people applied to become a
Wow.
community manager because they now wanted to run it their way because they had ideas. And
Yeah.
since then it has become a, so we had our shares of learnings. It's not that everything was rosy. There were problems in between. We had to solve a lot of things, but it's a part of the process, right? But now after 7 months we are in a place where it has become replicable. It works for the community. Every 3 months a community manager gets changed, and this is all resident community manager, no
Mm.
staff requirement anywhere, and it keeps happening. Now there is a set pattern that keeps happening.
That's beautiful. I love that. I always love hearing stories of how communities are built. You did mention like you guys would cook some of the food. I don't think they would want me to cook, man. I'm a meal prepper, so it's ground turkey and rice. So that would not be exciting. I'll have to pick someone else in the house that will be a little bit more exciting with the cooking, maybe a barbecue or something like that. But I want to get into some like nitty gritty of co-living. And I know we talked about this before, but on the operator side, scaling the business side of things, there's been a lot of companies that have gone out of business.
Right.
We live, I wrote some of them down here, the collective, quarters, they all look like really great companies. So how do you see co-living from a business perspective, and maybe even for just like an operator that's just an investor in co-living? How do you see that becoming scalable and profitable for the long term?
Right. So you pick up any industry, uh, pick up radio cabs, app-based taxis, Uber, Ola. Like in
Mm-hmm.
India, there was Ola. In US, there was Uber. pick up food delivery for that matter. In
Yeah.
Indian context, it was Swiggy and Zomato. In US context, it was DoorDash or something else, right? So pick up any industry which started new, right? The first mover and the second mover never made it big, right? It was
Mm.
always the third and the fourth mover. That's exactly what's happening in co-living, right? The
Mm.
first mover and the second movers who created this market. So who actually created the need, who actually made people aware that something like this exists and this is why it's important, right? That was the era for last 10 years. From all the failures that we have had, they were not failures. I don't term that those failures. What I call them as they were our learnings, right? From
Mm.
all the learnings that
Yes.
we had in last decade, uh, now the next decade, all of this it's already started getting implemented, right? And then you are seeing habits of the world now doing 35,000 units across the world, about 11 different geographies. They recently raised about 40 million euros, right? So we are moving in the direction of more sustainable businesses within co-living.
Mm-hmm.
Now, what went wrong there? It's not about being wrong, right? Co-living as a model was evolving. People were experimenting different business models, what would work, what not would work. Some worked, something not worked. And at some point of time, they needed access to capital, which was not available in the market. And that's how a lot of people started criticizing them for wrong things, I would say. But yeah, they had their journey. We have the learnings from their journey, which are now getting implemented. And the next decade, we will see a lot of bigger co-living companies becoming sustainable and profitable, right? So that's one part of the thing. Now,
Mm.
when we look at different business models, right, there are three major stakeholders within co-living. There's an investor, there's a developer, and there's an operator, right? And then there are tenants, which is the end user. So
Mm-hmm.
from an investor, developer, operator standpoint, there are different business models that exist, right? So there is at the start of this whole co-living revolution, most of the businesses were operator-driven businesses. Even I was an operator, right? I didn't own the buildings. I didn't invest in my buildings. All I did was take it from the owner, spruce it up a bit, and then give it to the tenant, right? So most of the initial companies were doing this because they were retrofitting the existing infrastructure. So the space usage was not optimized, the revenue usage was not optimized, right? But that's those are the learnings that we have now. If you look at Node, if you look at Habit, they have a mix of of some buildings being operator investor, in an operator investor model where they are an investor and they are operator. Some building where they are partnering with an investor and launching those specific properties. Some in some places where they are building them ground up along with a developer, right? So it's
Mm-hmm.
a combination of the inventory that exists now, which again helps you to spread out the risk because capital appreciation keeps happening on your fixed assets, the assets that you own, and then the rental yield that you generate from other assets gives you that edge and profit, right? It's better than all the
Mm-hmm.
other residential rental real estate classes that are available right now. So, again, if you ask me what's that one fixed formula for success within co-living, I will not have an answer for you because it doesn't work that way. Every
Mm-hmm.
geography is so different. Every
Yeah.
demography is so different. Every country, the laws in that countries are so different. So the way which model will work in which country is very very subjective. Right? But if you look at UK market, HMOs have been around for a while. HMO means house with multiple occupants, and that's what
Mm.
shared living is, right? And they have now started creating a community layer over their different HMOs. But UK is one country where they have the most advanced laws in terms of shared living that exist. In all the other countries of the world, there's still a gray area, right? So if you look at even in US, Pad Split is fighting a couple of cases where the local authorities just asked them to move out because they and deemed the place unlivable just because four people were staying taking one room each. And the zoning laws doesn't exist, or they are gray in the area, right? But look at it from a perspective of an end user. He gets to stay in a bigger house at an affordable cost, becoming part of a community where he gets support of people in the time of needs. There is a mental support, there is a physical support. It's all kinds of supports are there. But just because local authorities around the world doesn't know how to tax it or how to make money out of it, that it's still a gray area, right? So there's a lot of opportunities that exist with us here, and which will continue to exist. But I think the next decade is about implementing the learnings that we have had in the last decade and evolve our business models, which is actually happening, and we are seeing
Hmm.
positive results out of it, right? So, but from a small investor or a small operator perspective, I think this is the best time to be in business, because any industry when it grows, first it's not organized, right? It's very unorganized. Then it slowly starts getting organized, but there are a lot of small players. Co-living is in that stage right now, where there are hundreds and hundreds of smaller co-living spaces which are existing, which are becoming lifestyle business, and this will
Hmm.
push the overall co-living movement forward. And that's when at some point the larger players will start consolidating, right? So in the next 10 years we will see a lot of consolidation. So next 5 years we'll definitely see lot more co-living companies open, and a decade after that we will see a lot of consolidation happening, and there will be 2 or 3 or 5 big players that will emerge across the world at a world level.
Hmm. Totally agree with you. And you mentioned the problems, like we won't call them failures, always learning lessons from these companies. What do you think those problems were that now we're implementing solutions to those problems, specifically in the US?
Right. So okay, let me go point by point, right? One of the point was they were all operator-led businesses, most of them, which
Hmm.
means the margins are limited, right? And if you're not able to maintain occupancies above a certain level, you start losing money at a unit level. So your unit economics are not sorted, right? That's what started happening. That was the biggest problem. The second
Hmm.
biggest problem that started happening was uh, there was the behavior shift. You see it blessing in disguise or anything else, but pandemic created a behavior shift towards community, right? Which is now the demand is ever increasing for co-living, right? It was
Hmm.
not the same earlier. The demand at an overall level was limited, which was reflecting in occupancies, which were reflecting in unit economics, because the margins were limited, right? So all of these things are interconnected now, because the demand is more. Everybody is now, and the housing. Another thing that happened, I'm sure people don't think it that this way, but pandemic created a lack of supply, right? Uh, Now,
Hmm.
a lot of projects got paused, the housing units that were ready to be launched by 2021 got delayed by 2 or 3 years because of the lack of financing, lack of workforce, all these lockdowns during the pandemic, right? So when this housing stock got delayed, and the demand kept on increasing because now everybody is liking to stay more in communities, there was a
Hmm.
mismatch in demand and supply, right? So that's another problem that we're facing right now, that there's so much more demand than there's the supply that exists in the market. But this was not the case before, right? So that was another thing. And the third thing I think is we didn't we didn't value community as a marketing strategy,
Hmm.
which we are doing now, right? Because when you look at community and it's a great community, people are attracted towards it. People will know about it. They will kind of come to you. So that will reduce the cost of customer acquisition and improve your unit
100%.
economics, right? So, and improve your occupancies and unit economics. So ultimately, a lot of things started aligning in terms of behavior. A lot of models got evolved. Now people started finding investors and then creating these spaces so that there is no the margins were better. Now there is another angle, the monetization channels got increased. Earlier nobody was, they were only in the space business. Pre-pandemic co-living was about space business, but post-pandemic co-living Space business is one part of the revenue. Now there are companies who are monetizing their community, right? You can, and
Mm-hmm.
community monetization is scalable because it is like a SaaS business. So it is insanely scalable business, right? So multiple avenues of revenue generation has started coming in, which is now making more easy for the current co-living providers to kind of survive or have better unit economics than their previous counterparts. So yeah, all these things, I think I'm sure there are 100 more reasons that we can talk about it, but like right things at right time. Again,
Mm-hmm.
that always happens in every industry. We connect the dots looking backward, right? But at that point of time, we think about, oh no, this. And for some time, in about for when We Live went down, when Collective went down, there was a euphoria around in the market that no, co-living, it's not a sustainable business model, it won't work, and so on and so forth. Uh, so there was a Big Pockets conference recently, I think in
Mm-hmm.
Orlando,
Yeah.
and Pat Split's CEO was there, and he wrote on LinkedIn about one very interesting thing, right? He said midterm rentals are at the highest growth rates. So month to month leases, people looking for 3 months, 6 months, right? That's the market that's growing very fast. What earlier, when co-living companies started, they were still doing a 12-month lease. Even in US, even in UK, they were all doing 12-month leases, which has changed now. People have become more flexible, which is, so you have to have operational excellence. That is true, right? Because lesser leases meaning more operational work, and you need excellent SOPs, you need excellent technology. Uh, like another interesting thing, access to technology and the implementation of technology in co-living has grown. So earlier,
Mm-hmm.
so think about it this way: the tools that were available to a co-living operator in 2019 were all the tools, old tools, built 10, 15 years ago, and
Yeah.
they were retrofitting those tools to use accordingly. Now you have tools which are built specifically for co-livings. That is where you're optimizing to the last penny that you can, monetizing different avenues like community, right? And
Mm-hmm.
amenities, right? So that's the journey that we have seen in last decade, and I'm very optimistic about what we are going to see in the next decade, and I'm really excited about it.
Guys, I got my pen in hand. I've been taking notes this whole time. This is a master class on not only, co-living and rentals, but also in community. This is something a lot of people right now see the value in and also see the monetization potentially in. So this is huge, man. I'm loving this. Question for you, going back to community. I can't remember if you told me or someone else. They said like 30 is like the perfect community, and then if it gets more than that, it gets too big, and then you have to break up into like mini communities. Can you talk about that?
Right. So again, this comes from experience.
Mm-hmm.
In my experience, uh, when a community starts, and 30 is not a hard stop, right? It's a number which gives you perspective. So it's not about 30, 25, 20, 40, right? It's about around that number. The communities are cohesive, right? They everybody knows everybody. So even if you are in a conference, if the conference or a event is limited to, let's say, 30 people, you will have the best time at that conference because you will make meaningful connections, you will meaningfully talk to people, and you will follow it up, and you will have impact on your life and business. But the moment
Mm-hmm.
it grows bigger than that, right, then you look at any conference that you go, and there are hundreds people, you you will not know everybody. You will start finding a group that you confirm with, or group that you want to kind of get into, and there will be a lot of smaller groups which will be around the room. Pick up
Mm-hmm.
anything, like pick up any dinner, gala dinner, pick up any kind of auction, pick up any kind of social engagement, right? Whenever the number goes upwards of 30, 35, 40, automatically the human nature is such that you start seeing smaller groups. So that the
Mm-hmm.
same logic is applicable to co-living spaces, right? If you have a space less than 30, then the communities are cohesive. You can do a lot of things together as everyone. But now there are co-living spaces where, let's say, 300 units, 400 units, 500 units. It becomes kind of impossible for all of them to have fun together. Then you start forming lower kind of the communities in lower numbers and smaller groups, and then that starts becoming more and more prominent. So if you are building a community of a large co-living space, then the approach will be totally different than when you're
Mm.
building for a smaller co-living space.
We're gonna clip that up, and I'm gonna say Mayank says that no more than 30, or else not. It's not a community anymore.
Yeah.
30 is a magic number for communities. No, I love that, and that makes a lot of sense because I've been in huge rooms, and it's almost like, all right, it's too many people. Who do I connect with? But like you said, if it's a 30, person room, then you feel more comfortable and to get vulnerable and talk about experiences and build those deeper connections. So I totally agree with that. I love that. Um, Man, this is so good. I have so many more questions, but I know we're kind of close on time. Who are the companies that you're looking to, help? I know your schedule is super slim right now, and you're actually probably not even taking on very many companies. But let's say there's a company out there that listens to this is like, dude, I need him as my consultant. What are like the specific companies that would be perfect for you?
So I always, it's not about working, right? I always like to connect with people. See, work can happen eventually, and we can find common grounds for that. But I always love to talk with people who are building different types of co-living spaces, or the tech companies who are building solutions specifically
Hmm.
for co-living audience, right? Or one of their audience is co-living. So these are the two types of companies I would always love to interact uh, and share my experiences with, because see, co-living is at that juncture right now that it needs as much collaboration as possible. We are not
Hmm.
competitors, and next 10 years also there is no competition, because the pie is so big that everybody will become successful. It's about collaborating, sharing your knowledge with each other, making the maximum impact is the need of the co-living world right now. Because if this domain has to become sustainable, scale, and start impacting actual people's life at scale, then we need to help each other in any way we can, right? That's the philosophy
Hmm.
that I go with. That's why I talk to people. I share my experiences in many forums. So I keep recording these podcasts. I keep doing master classes. Yesterday, I had a event where 26 people joined, and the masterclass was on tech toolbox for co-living, right? So I keep doing this in order to make sure that whatever I know or have gathered and learned goes to as many people as possible. That's always the intention. And I would love to connect with, again, in the similar spirit, all the co-living companies, whether you're building it for seniors, whether you're building it for digital nomads, whether you're building it for urban working professional or even students. I would love to connect with you, know your story, your journey, and share mine, and see and just see how what we can learn from each other, because I think that's very very important for where we are in our as a sector right now. And
Hmm.
then the tech providers who are building for co-living, because the transfer of knowledge needs to happen, right? If nobody tells the tech service provider that these are the pain points, this is what you need to build, they will build something and give it to you, and you will end up using it, right, without it being super useful. So both the sides would love to interact with anybody.
Love that. You hit on like the biggest point for me why I even got into co-living. Obviously, it was a need that I had that I wish I would have been able to, instead of graduating college and spending way too much money on a studio apartment by myself, being lonely. I wish I would have had a community around me, early on. And even now, I'm like, I'd rather live with some awesome people than just by myself. So it's like the fulfilling fact that you're really solving and helping people in a truly personal way is what makes me just so excited about co-living. Just getting texts every day from different people saying, man, like I just met my new best friend through, one of your houses, or you inspired me to do XYZ. I'm like, yes. Like obviously there's a financial gain, but just that relationships that you're able to build with people is just so beautiful and powerful. How do people
And
connect with you? You want to say something? Go ahead.
yeah, I want to say something here. So like 2 or 3 days, 4 days back, I wrote a post
Mm-hmm.
reminiscing about the story of my co-founder, who was a truck driver and then became a taxi driver, then became a developer, a civil contractor, building smaller buildings. then started Simply Guest with me. He was a school dropout, never studied after 10th. And then when we stopped Simply Guest, he was at a point where should he go back to his old life or should he do something new? He is now a product engineer and an Elixir and a Flutter developer. So see his journey from a
That's
truck
amazing.
driver to a product developer, right? And this was enabled because of co-living. So when I
Mm-hmm.
wrote about it, my customers from 5 years back commented that we still remember co-living at Simply Guest. It was wonderful time that we had there. We never found a similar space to co-living Simply Guest after that. I'll send you the screenshots of that. So
Love it.
that's how you impact lives, because that's what truly that's the true happiness for an entrepreneur, because you even if one life is impacted, it's enough. Like that's how I think, right? But
Mm-hmm.
it's so much more. Co-living has the potential to do so much more, I think. And that's why I want to enable anybody and everybody who is working in this field, and that's my vision for next 20 years.
I know if anyone's watching this, they can feel our energy and passion of what we're doing. Even those listening, I bet just through our voice, you can tell like this is something that is so fulfilling for both of us. So I want to let people know, how do they connect with you? I know you're very active on LinkedIn. Is that the best, platform to connect with you?
Yeah, 100%. I think LinkedIn is the best way. Super responsive. I keep writing there. I keep sharing my learnings there. So I think LinkedIn is the best kind of place for anybody to connect with me. And yeah, I think you can share my LinkedIn link, and if
Mm-hmm.
anybody wants to connect, please do reach out to me. I'm super responsive there. But I would like to kind of, before we finish, I would like
Yeah,
to share two things, two quick tips. I think we spoke about it earlier, but I want to
please.
again share two things that any co-living space, smaller or bigger, doesn't matter, should do. One is build digital presence, right? When I
Mm-hmm.
say digital presence, it's super important. 93% of the decisions to buy something are happening online, and if you're not there, then you're losing big time, right? That's the first thing. Now, a lot of we can go into detail uh, within the digital presence, and it consists of a lot of kind of components. But on the whole, building a great digital presence is one of the biggest thing. This starts even before you have a space, right? Start building your digital space. Don't wait that, okay, I will have a space, I'll launch it, and then I'll start building a digital presence. No,
Mm-hmm.
start it even before you have a space. Just when you're thinking about doing this business, you should start then. If you're not starting, then you're late anyway, but you should start it as soon as possible. So that's one. The second thing is focus on community, right? As we spoke at length before
Mm-hmm.
about community, focus on community from a perspective that it will help you in long term. So both the things I said will reduce your customer acquisition cost, will help you scale faster, will help you develop sustainable processes, right? And in turn will help you do and build a sustainable, profitable co-living business. So these are the two most important things which everybody of us should look at.
Love it. Great tips. Decade of experience. Mayank, I appreciate you, man. We're about to wrap up. This is Jesse Ray on the Growth House podcast. And we'll put all the show notes, descriptions, how to connect with you, man. Really appreciate you.
Thanks a lot, Jesse, for having me.
All right. Take care.